Okay, we're back to the markets conversation as we step into the new year in just a few days. We have just about 6 sessions left for the year, so and then we're done. So, but let's talk about the mutual funds and the exchange-traded funds. It's part of the, if you look at the Nigerian market very well, you've got about the equity side, you got the mutual fund, you got the ETF. Ola Belgore, Managing Director and Chief Executive Officer at Afrinvest Asset Management, still here in the studios. I'm sure you have one eye on ETF, don't you?
Yeah, definitely. Yeah, definitely. ETF is the future of mutual funds, basically.
The future?
Yeah. What I mean by that is that mutual funds has all its benefits, diversification, economic of scales and all of that. But there are one or two disadvantages to it, and that would be in terms of pricing. If I want to buy a mutual fund today, I'll be relying on the price of yesterday, but with ETF, is real time, is online. So with ETF, I can decide to buy a mutual fund like an equity stock while the market is open. So it's the future of mutual fund. The problem with Nigeria regarding that, though, may be the fact that I don't think we are sophisticated in terms of investment. Looking at the masses, of course, there are a lot of people who understand investment, but people like ownership. I own First Bank, so I can see First Bank building on the street, and I have a sense of ownership and all of that. And then you bring them to mutual fund that they do not know what they actually own. They just know they own a basket of funds and all of that. And then you now go further to talking about ETF that is almost paperless. That sense of ownership is far removed, But in terms of returns, the dynamism of the market and all of that, ETF is the future of mutual funds.
So ETFs is like for folks like you who understands it all.
Well, for a lot of people, it's just that we need to do a lot of education to get the people to understand that this is actually good for them.
As well.
Yeah.
Okay, with what they can see and what they cannot see.
Exactly.
Let's bring in Michael Famoroti, who is an economist at Vertiva Capital Management, into the conversation. Michael, good morning. It's good to have you join this conversation via Skype. Vertiva Capital Management, one of the pioneers, let me put that word, investment firm that rolls out ETF in this market. Talk to us about this market. How did this market perform in 2017?
Hi, good morning. Pleasure to join you guys. I think, unsurprisingly, with the market itself up about 40%, and a number of sectors like the banking sector especially really up this year, it's unsurprising that ETFs perform very well. So obviously we know that ETFs basically just try and track certain aspects of the market. So I think the Vertiva banking sector series ETF is up about 67%. And that is a very good performance, because if you look at some of the top 10 names like GT and so on, they're up slightly less than that, mainly because the banking sector ETF also benefits from having some of the smaller names, which of course we know have seen a lot of appreciation as well. So in terms of performance, it was really as good as you can get for a very safe asset, really, as you didn't need to do much thinking in terms of which banks to invest in. And a number of the other sector series especially did very well. And that was good to see, because I do agree that ETFs are a product that should become a lot more important in the coming years.
Well, it's been a few years since we started with the ETF, with the folks from South Africa. I guess that was the backlist back then. I can try to remember that the gold ETF that Vertiva was part of. So in terms of acceptance, in terms of deepening, in terms of size, in terms of local investors understanding basically what ETF is all about, how long have we traveled?
Well, I think there's definitely been progress. The product is 5 to 7 years old max. I think there's definitely been improvements. If you look and see that now there are about 7 or 8 different ETFs on the exchange, and there's a bit of diversity as well. You mentioned the gold ETF, but then there's also the Lotus ETF, which is for Islamic compliance instruments, and then there are the Vetiver sector series indices as well. And perhaps most excitingly for 2018, there is the S&P Vetiver bond ETF, which basically tracks the performance of the federal government bonds on the S&P index. So even though the sort of market reception hasn't been as buoyant as in other countries, in terms of product innovation, we have made a lot of strides. And I do agree that as education improves and as market sentiment sort of remains strong over the next coming years, people will begin to look at instruments in the equity space, as we have seen in the fixed income space, and ETFs are likely to get a lot more traction.
Ola Belgore, the Managing Director and Chief Executive Officer at Afrinvest Asset Management, is live here in the studios. Michael. Ola, this Nigerian Stock Exchange is interested, wants this more of the ETF to come into the play, and we're looking at perhaps 2018 will be part of this. So what should we be telling investors about ETFs that you think will rally more of our retail investors to believe that, look, this is also good for you because it broadens the market, it makes our local market becomes more global in terms of the product offerings and in terms of globalization?
Well, I did mention earlier that there's a lot of work to be done by the capital market operators and all stakeholders in the capital market. There's a lot of financial literacy that needs to go on. Like I said, ETF is not well understood, perhaps even by the operators, you know. But I know that the NSE is doing a lot of good work there. They're trying to, the organizing series, in 2017, they organized about 1 or 2 educational forum for operators, just to get us to understand it a bit more and how it works, and so that when we understand, then we can pass that knowledge to the investing community and all of that. So, and for, like you mentioned, we also have our highs. We do not currently have an ETF, but we think that is the future of investment, especially for pooling funds. And we've had, at Afrinvest, we've had a banking sector report, which is an annual report of the banking stocks, and for 11, 12 years now. And we think that it's about time that we put our money, where our money is. You know, we keep saying this is stocks you should buy in the banking sector and all of that. So we're going to be looking at launching an ETF on the banking sector, you know, so that, because right now from our in-house tracking, the return on selected banking stock is about 80%. You know, so imagine that you have a fund, an ETF that you can sell to your client and give 80% return on. It's a fantastic.
That's a good one.
It's a good one.
Michael, back to you. Why is everyone? Why is it that every one of you fish around the banking sector? Liquidity, price, valuation, what have you? Everything working for that sector, isn't it?
Yeah, I think you touched the nail on the head, really. Liquidity, price. Also, if you look at corporate governance, also in terms of foreign investors' sentiment, they do tend to favor the banking stocks. And it's unsurprising, as globally financial services are always a key sector in an exchange. And Nigerian banks have made a lot of strides, thanks to the CBN in the last 15 or 20 years, to get to a position where they can actually be attractive to both domestic and international investors.
But can't we work on something else? Maybe for consumer goods and industrial goods, would that be okay?
Oh yeah, definitely. So Vetiver does have ETFs for the industrial and consumer sectors. I think the consumer good ETF is up almost 40% this year, which is pretty good when you consider that in the consumer goods space, there's been a lot more diversity in terms of, or there's been a lot more variation in terms of performance. So the likes of Innsbruck are up significantly, Guinness is up significantly, a number of other stocks are down. So it may be a bit more difficult to pick in that sector. Whereas, you know, if you get the ETF, you were looking at a return of about 40% this year. And I do think that as each sector on the exchange gets stronger, and as we get a wider breadth of key sectors, then the sector ETFs will make a lot of sense. But we should definitely not restrict ourselves to just sector ETFs. We have mentioned the New Gold ETF, we have mentioned the Lotus ETF, and really, because it's a derivative product, there are really an infinite possibility of ETFs that can be created. I already referenced the Vertiva S&P bond ETF, which I think is one of the more exciting products for next year, given the outlook for interest rates. So the market, there's a lot of potential there. Obviously, all this talk will really be for naught if investor education and appetite doesn't catch up in the next couple of years or decades.
I want you folks to excite me in the new year, and that's why you are here this morning, Michael, and Ola is also here in the studio, so give me some excitement in the new year, because I want to hold vanilla, which is basically the stocks. I want to hold perhaps some direct treasury bills and bonds. At the same time, I want to also see if I can hold the mutual funds, and finally some ETFs. So that looks like a balanced market position for me, if I have the money to build that. So do you think this is something you think retail investors should be convinced to do in the market in the new year? Michael?
Yeah, I definitely think that portfolio diversification is key. For 2018, I know that a number of retail investors may be looking at the 2017 rally and be a bit worried about valuations. But the outlook generally for the market is positive, and a number of people may not be sure what stocks to go for. So I think the safe bet is, you know, at the very least, you can track the markets, right? So if you get the ETF that tracks the market, yes.
Sorry, that's a little bit freezing there, Michael. Ola, let's take that. Ola Belgore, let's take it from there. What would be the key issues for you analysts and fund managers, and what you think investors would want in the mutual funds and an ETF in the new year?
Certainly stability. Like Michael said, there may be genuine fears that because of the rally in 2017, there may not be so much as much return in 2018, which is correct. I also mentioned that earlier, that we do not think that for the equities market there will be so much rally, but we know that earnings is improving, and that will definitely drive the equities market and all of that. For the money market, I also mentioned earlier that it may not be as exciting because government is looking at other sorts of servicing it using external borrowing, and you know, it's just and it's just issued 3 billion euro bond, and of course because it's long time, it's also better for them as against the short time treasury bills.
So you're already thinking. You are positioning.
Yeah, of course. That's my job.
I understand. That's your job.
That's my job.
That's what you'll be worrying about to the end of the year, even including the holidays. Michael, just about 30 seconds from you. What will be the key issues for you for the ETF market in 2018? 30 seconds. Give it to me.
So again, I'll come back to the bond ETF. The outlook of interest rates is downwards, and a lot of investors who have been fat on 16-17% in the last couple of years will be a bit reticent in that market. And I think the bond ETF offers an opportunity as interest rates go down and prices go up, you have opportunities for capital gains by investing in that ETF.
Okay. Michael Famoroti, economist at Vertiva Capital Management, thank you very much for being part of the program this morning on Skype, and live here in our headquarters, Lagos studio. Ola Belgore, you have the opportunity of that handshake, the managing director and CEO at Afrinvest Asset Management. Michael didn't get that. Maybe next time. Let's take a break. After Oscar Onyema, the CEO of the Nigerian Stock Exchange, is now an associate member of the Chartered Institute of Stockbrokers. So will he be trading on the floor as a stockbroker? That's a question I'm asking next. Stick around.